Hi traders, Forex James here, and in this video I will be sharing the three things I look for on how to anticipate when the market will turn. So if you guys have watched my other videos, finding turning points in the market is really crucial for us traders. So that's when we would look to enter a move with a small risk and potentially achieve a bigger reward. And the trick is to not jump in too early into the move, but also not too late. So we have to find that sweet spot of when to enter. But before that, we have to be able to mark places, spots, or areas in the charts where we could anticipate turning points. So in this video, I'll be sharing with you three things that I look for. These are the three basic reasons uh, that I use to anticipate when the market will turn. Okay, so the first thing is previous levels. Okay, so I usually mark my charts with a horizontal line, a trend line, or a rectangle. Okay, so this is what I call a PRZ, which stands for a potential reversal zone. And this area here, if we look further, is basically an area where there is a strong demand. In other words, there are more buyers than sellers. More people are willing to buy in this area more than what the sellers are willing to sell. So if we look back here, looking at this chart, price is showing a strong move to the upside. Okay, and this is the point where most people would be like, oh, this is an uptrend. Where can I look for longs? And obviously they don't want to be long at the top here because they've missed out on an entire move. So they'll be looking of places for places where the market will retrace to. Okay, and there are many methods that people use. Some of them would use a Fibonacci retracement, and they'll be like, oh, this is a 50% or 38.2 or 61.8. That's where I'll enter. Okay, I don't usually use Fibonacci. All I look for is just the previous levels of how price reacted in this area here. Okay, and looking at this is clearly showing that there were a lot of buyers here, and those people who have bought here and made money in this move are probably going to be long again in this area. Okay, imagine you're someone who is long the pound, and you remember that when you bought the pound at 1.2370, let's say, it went up. And what happens if it goes down again? You think that it's a good opportunity to go long again. Okay, so that's what we look for. Number one, the previous levels. Okay, we'll look at another example. Okay, let's see. Zoom out further. Right here. Okay, again, this is a strong uptrend, an up move. We'll be looking on when to re-enter to join in this uptrend. So as you can see here, this is an area. This is what I call a swap zone. It's an area of where that has been tested many times. So same reasoning behind this here. So imagine you're a seller here, okay? You're a seller at this point. You sold, and then you get stopped out. So when price return to that same area, you realize that this has gone against you, and how you would be able to join the new move. So when you see price was where price came back to where you were stopped out before, you want to jump in. That's the psychology behind why um, resistance can turn into support. Okay, and so for this area here, this is also a strong demand. So this is still considered valid because price just went through the rectangle by a few pips. It's not meant to respect the rectangle to the pip. That's how trading is. It's just merely a zone. And we have to look for more confirmation here to enter, because we don't want to enter just long here with our stop loss below this point. We could do that, but it wouldn't be a great reward to risk trade. Okay. So there you go. We look at previous levels. And the second thing I look for is the approach to the level. Okay. This here, this big move here, let's see. Okay, let's compare this up move here. Okay, this here, this up move compared to this up move. Okay, would you agree if I tell you that this is more powerful? And that's because of the time it actually took for the buyers to move price this much compared to this much here. Okay, so this is about 700 pips, more or less. Okay, and for the first part, it took about maybe 3 months or so. And right here, it's probably a month. So that's safe to say that this is the buyers are more aggressive here. Okay, this is basically what I call an impulse move compared to a corrective move here. Okay, so what kind of approach are we looking for, guys? If we're looking for the markets to turn, in this example, we want the approach to not be as strong. Okay, let me repeat that. We want the approach to not be as strong as the previous move. So what do we look for? We would look for basically a corrective wave. And how does corrective wave move? Usually like this. Okay, as opposed to like this. This just means that the sellers are more reluctant here than this here. You can call it whatever you want, a 3 drives pattern, a pennant. Sometimes it forms a wedge, or whatever you want to call it. But the psychology behind it is that people are not so eager to sell here. Okay, look at how price descends slowly. This is what we call the 3 drives pattern. So it made 3 down moves to the downside, and then it reverses. That's why it's a reversal pattern. So that's the kind of approach we look for, guys. We would be less willing to buy here if the move is a strong red candle. Okay? And the third thing we look for is the higher time frame, or just the bigger picture in general. It's really important to see where we are in the bigger picture, okay? Because by just looking at this, we don't know if this is actually a pullback from a bigger downtrend. This just indicates that in the long run, if this was indeed a downtrend, which it is, um, there were more sellers who are more willing to sell than the buyers. Okay, let me clear this chart. Okay, so if we're looking at the H4, we might see a good level here, okay, as what we've determined in part 1. And see, this is a strong approach, but then price ranges to this part here. This is the kind of approach we look for, guys. It's more sideways than a sharp down move because we're looking for buys here initially. Okay, so we have point number 1, the previous level, which is a good level. Point number 2, the approach, which is also a good approach. The last thing is we need to see where we are in a bigger picture. Okay, here's what we have here. The market is reacting to this top, to this resistance here on the daily, which means that the sellers here, they jumped in again over here to push price further down. So that's not to say that we shouldn't take a trade here. We could if we're more aggressive. But from this bigger picture, the direction bias is still to the downside. Okay. So the things I look for, number 1 is the direction bias. Number 2, it's the market phase. If we're in a trend or in a range. There's only 2 possibilities for each, guys. Up or down, trending or ranging. Okay. So in this case, direction bias is to the downside, and we have a buy setup here. So we could either just pass on this opportunity, or if you're aggressive enough and good enough to make some pips out of this move, that's fair enough. Okay, let's take a look at another example. Let's take a look at the dollar CAD here. Hold on, guys. Okay. This is why I always start off my analysis from the higher time frames, because they paint a clearer and a bigger picture. Okay, so let's look at some levels here. Let's look at this point here. Oops, sorry. This is again an example of a level that failed to hold. Okay, this may look good over here, Price was rather strong though when they approached this part. But more importantly, on the weekly, we're actually in the channel. So with that being said, the direction from this point, this top trend line, is actually down until it could reach somewhere at the bottom of the channel line. Okay? So again, we could make a quick buy over here and make some pips out of this. But in the bigger picture, it's still painting a downside bias. Imagine this hasn't happened yet. Okay, guys. So to recap, those are the three things I look for: the levels previously approached and the bigger time frames. I hope you find this video useful. Shoot me a comment or an email at info at forexchange.com. If you have any questions or if you have any feedback or you want me to cover anything in the next video. And thanks for watching, guys. Please don't forget to like and subscribe.